Hey everyone, thanks for tuning into this video. I thought I'd just make a quick video explaining this indicator I found on the internet, where all good things are found, called the Bitcoin Energy Value Oscillator. I did not make this. This was made by Capriol Charles. I believe his full name is Charles Edwards, according to this article right here, but we'll get into that in a second. But basically what this indicator is trying to measure is how efficient it is to mine Bitcoin. And what you can kind of see here is that, you know, our energy value is, pretty closely associated with our blow-off tops, where we get a higher energy value towards a higher price point in Bitcoin. So getting down into the Pine script here, I'm by no means a Pine script expert, so I'm probably going to get a few things wrong here, or at least miss a couple things. But basically what this is trying to do is calculate the energy value in terms of how much energy is put into mining Bitcoin, in terms of joules of energy as the only input. And then this is normalized by the supply growth rate and then multiplied by a fiat factor, which is a constant representing the fiat USD value of 1 joule. So getting into this a little bit more, I'm actually not entirely sure where this 2.0 times 10 to the negative 15th value came in. I tried to actually work this out myself, where I was getting something more in line with 3 times 10 to the negative 8th dollars per joule of energy, where 1 joule of energy is 1 watt second, but we typically see this as kilowatt hours, which is about 3.6 million joules of energy in 1 kilowatt hour. And a typical energy price for this is about 10 cents. But this can vary depending on where you live. And then if you work this out a little further, you can get to the value I arrived here. Again, not really sure where this value came in. Maybe I'm missing something. But again, what's kind of more important is not the actual value of this oscillator, but some of the patterns that we're seeing. Again, a couple other values. This model is assuming that there's only 1 million lost Bitcoin in the circulating supply. So meaning 1 million Bitcoin will just never be used or recovered again. But I've personally seen estimates ranging from 1 million to even as high as 5 million Bitcoin. So some of these values could be modified. I'll put a link to this page in the description of the video so you guys can toy around with it yourself. But diving in a little further, we get into this energy efficiency value, which is basically how many joules of energy it takes to get 1 gigahash of mining power. And with this data set, it's about just 200 lines of manually entered code. But what's kind of interesting to see is that at around the start of 2011, so I guess that was January 2011, it took about 8,000 joules of energy to get 1 gigahash of mining power. And then this pretty much is just decreasing for the remaining time of Bitcoin's existence. But it's kind of interesting to see right around here in late 2013, mid 2013. I believe this is correlated with the introduction of ASIC miners, which drastically increased the efficiency. And we'll actually see that in the chart in a little bit. But basically from here, we're going from like around 48 in 2013 all the way down to around 0.04 in I believe that's June of 2022. So from this data set, you can obviously see that there is a drastic increase in efficiency over the years of mining Bitcoin. This part right here is more or less just formatting the hash rate, the energy efficiency, getting some of that data too. This also takes into account the stock to flow, which I think is kind of interesting, and the supply growth rate. But again, you guys can pause the video or look in the script yourself to really get a full grasp of what's going on here. Personally, I don't have a full understanding of where this is all coming from, but nonetheless, this is it seems to be a pretty highly regarded indicator. So I can't speak to the validity of this part of the code, but either way, moving on. Uh, so the energy value that they ultimately come upon is our energy in over our supply growth rate multiplied by a fiat factor. So that's more or less the code there. Again, I'll put a link to this in the description for that for the code, so you guys can play with this oscillator yourself. But I also wanted to point out this article right here. This is actually using the same metric that I'm going to talk about today, and it was written 2 years ago. Poor Tony, he's getting called out in this video. That it was used to basically try to say that Bitcoin was going to crazy all-time highs of about 260K per coin based on this oscillator, because the previous peak of this oscillator was around here, and we had about that much to move up to get to that peak. And this is actually, I think this article was written actually pretty close to the top of the first peak, which is around 60K. But I just wanted to put this up to kind of show how, we really shouldn't be taking these oscillators as, as scripture. We shouldn't run to the bank with them, because they can often be wrong, or how we interpret them could be wrong. So again, I don't think this was the best interpretation, but I think we can get some value from this indicator. So moving on to the actual chart, I usually view Bitcoin on the weekly Heikin-Ashi candles on a log scale, just because I think that's a good way to view it in terms of cycles. But again, this is our energy value oscillator right here. I'm kind of omitting this part of the data. This was that 2013, 2014 area where the introduction of ASIC miners really just blew this value out of the water. So really our start for the data is right around here at the bull market peak of 2013 and 2014. So what we can see is our energy value starts to drop, and that's more or less pretty closely associated with our bear market, and same with the bottom here, seems to be associated with the cycle bottom. But what's interesting is that we ultimately come back up a little bit, and that's more or less associated with our get out of the bear market rally, and then what happens again? We start dropping, and that seems to be in line with an accumulation phase where the price of Bitcoin more or less just kind of moves sideways. You can make an argument that it actually increased here, but the important thing to note is that we're mostly moving sideways here. We're not kicking off into a crazy bull market rally straight off the bat. But once we start putting in our lows here, that seems to be an indicator that our bull market rally is kicking off, and then from here we just go to new all-time highs. Then what happens? We basically repeat the same cycle. We have our bull market top, we start coming back down, and then we hit a bottom, somewhere around here, and then our energy oscillator starts going back up, and then we hang out in this area. This was a little more pronounced, in my opinion, in, I guess this was 2019, where we came up again to 12K, which was kind of crazy. And then what happened? Our energy oscillator started moving back down, and then the price more or less was just moving sideways, kind of emitting this little black swan event here, but the price more or less just kind of moved sideways, and then we started going back up, and then our bull market kicked off. We don't really have a peak to work with here, because we didn't really have our typical blow off peak in 2020, 2021. And that's for whatever theory you want to believe in, whether it's macroeconomic headwinds or fraudulent crypto exchanges manipulating the price of Bitcoin. So, whatever theory you want to believe in. But we can kind of see the peak is really in the middle of our two twin peaks right here. So we'll just call it an average of, I don't know, say right around here. That's where our energy oscillator peak, is we're going to call it right there. So what happens? We start going into our bear market, and then we start going down. And where do we sit today? Spoiler alerts for the next part of this video, that is, uh, more or less just a horoscope of Bitcoin. But we start moving back up. And maybe this is just noise, and maybe this is just hopeful thinking, but we could be seeing this little bounce going up into our little get out of the bear market rally. So that might be what we're seeing today. It would be interesting to see where this energy oscillator is in, say, maybe May, April, even June of 2023, to see if we're in this area and if we start going back down again into our accumulation phase before our next bull market. And up here, I kind of drew, what that might look like on the price. Again, the numbers don't really matter. It's more just the pattern that we're seeing. And this is kind of associated with, a potential stock market crash in 2023, which a lot of economists are sort of predicting. But where do we go from there, right? So we'll have, maybe we'll go back up here, and then maybe we'll go back down, and then we'll have a little accumulation phase where the price just kind of goes sideways for, more or less a year and a half, and then we'll kick off our bull market. And what could that look like? In terms of price, it's impossible to say. So this is, don't take this to the bank. Don't do anything with this. This is a squiggly line that I drew that has no value whatsoever. But it could just be an indication of where we might be going with our Bitcoin price and what typically happens with our second cup. I'm calling this a double cup pattern. I don't know if that's actually a technical analysis term. I'm kind of new to this, but I do like using some of these indicators to help navigate the crypto market. And, I hope you guys do too. This is just, kind of an indication of what we might be heading towards. If history is any indication, that we could be seeing our energy value oscillator go back up into this area where we have our little get out of the bear market rally, and then we just go sideways for about a year and a half before eventually kicking into a new bull market. But, I can't predict the future. This is just, yet another indicator that helps us navigate the crypto market. So I hope you guys enjoyed the video. Please leave a like and comment down below if you guys enjoyed this content. Please leave any suggestions for the channel on things you would like covered. And I hope you guys have a wonderful day. Goodbye.